Hello, ladies and gentlemen. Greg McCloskey with a Kickstart video. Today's date is July 25th, 2024. It's the day after the largest declines in the S&P and NASDAQ indices since November and December of 2022. Not last year, but 2022. Today we are seeing modest changes in the major indices. In fact, the NASDAQ and S&P index are pretty much unchanged. The Dow Industrial Average is up a modest 25 points. What's going on in the foreign exchange market? I'm going to take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. We also had some pretty some data this morning with GDP rising higher than expected, but the price deflators were lower than expected. We saw the durable goods orders fall sharply, but that was influenced by transportation orders, and we saw the initial jobless claims dip a little bit from last week's surprise rise to 243. It came in at 235. Actually, last week was revised to 245. So some mixed data and data that you can explain away. We saw higher consumption, but inventories added 0.8% to GDP. We also didn't probably have the trade numbers and the inventory data yesterday, which likely subtracted from GDP. The good news is, or the winners was Atlanta Fed, which projected that GDP growth would rise by 2.6%. It rose by 2.8%. That was compared to the 2.0% that the economists had predicted. So cheer for the Atlanta Fed. Anyway, let's take a look at some of the technicals that are driving this currency pair. We will start with the euro versus US dollar. Looking at the 4-hour chart of this currency pair, the high price today came right up to test the rising 100 bar moving average on the 4-hour chart. That level comes in at 1.08586. During the GDP data, we saw volatility up and down here, but now trading in between what was the low and what was the high for the trading day, and we're also above the 38.2% retracement in trading yesterday, and the price did move below that 38.2% retracement, but as you can see, the price action has been above and below that level. We also trade above and below the 100 bar moving average for that matter as well. This swing area also comes in play between 1.0853 and 1.08617. I'm going to just go out on a limb and say if we move above the 100 and then move above this swing area, then things would then we have one more hurdle above to get above to increase the bullish bias, and that's right here at the 1.08725. It sort of looks like a head and shoulders break, doesn't it? So moving back above that level would be more bullish, and then we'd start to look higher for the euro versus US dollar. That's the upward storyline. On the downside, get back below the 38.2% retracement of the move up from the June low to the high price that we saw in July. Should increase the bearish bias. We do have to get below our low prices from both yesterday and today to open the door for it, move down toward the 200-day moving average on the downside in between these two levels, and the price is sort of neutral as the market waits for the next shove one way or the other after the declines that we've seen over the last few weeks. We see getting some consolidation right above and below the 38.2% retracement. Let's take a look at the dollar versus yen. Now, this currency pair has been on a race to the downside over the last 1, 2, 3 trading weeks. This week's trading trend pretty much started on Monday and is going to continue to today, where the price reached a target area down here around the 151.94 level. Now, the low price for the day came in at 152.08, so we got within 15 pips of this swing area right through here. Note here that this was a ceiling right through here, a nice, pretty strong ceiling. Then we moved above it, and then we came back down on this intervention and found support right near that old ceiling before moving to the upside. So, it's something that we all can see, can't we? So when the market and the world can see these levels, they tend to lean against it. Why? Because they can risk a little to make more than a little. That's the name of the game in trading from risk focus standpoint. Now, we off of the GDP and news and all the other news that came out, we did move back above the 38.2% retracement. So buyers have come in here and pushed the price up back to the upside. we have this swing area up here between 154.52 and 154.87 to get a target on the top side. If we get above that, then we look toward the 100-day moving average again for this currency pair. So we're seeing overtures of buying interest finally in the dollar versus yen. There's a talk, however, that the central bank might be looking to cut back on their bond buying when they meet next week, and also potentially raise rates. We will see how that all plays out, but certainly, we go from just buying up here to selling over the last 3 weeks in the dollar versus yen, moving below 38.2%, approaching the 200-day moving average as well, is not a bad level to sit there and try to buy against, especially against this swing level as well. So we are seeing a little bit of rebound in that currency pair. Finally, let's take a look at the sterling versus US dollar. I'll put it on the hourly chart for this currency pair. What is plain to see here is that the high price in trading here today, this spike high right here, came right up to the 100-hour moving average and found willing sellers against that level. Admittedly, yesterday we moved above and below it through here before it rotating to the downside toward the close and moving down toward this level right through here around the 129 level into the close, and trading here in the European session. We moved below that level, but then again, as mentioned, the spike to the upside here in the European session did find willing sellers against the 100-hour moving average, keeping the lid on this pair, and we forced the price it down. We are now below the 100-bar moving average on the 4-hour chart, and also below the 38.2% retracement of this move to the upside, which is more a tilt more to the downside, admittedly, for this currency pair. We do on the downside, let's see, let's go to the 4-hour chart to see where this trend line cuts across. But we have this trend line connecting these highs, and the underside of that trend line comes in right around the high price going back to this week right here at 128.45. So perhaps that would be a target on the downside. Also, you see this low that we have in trading here today. I had a horizontal going across it. Why? Because that was near this high price going back to June. So we are starting to tick away or tick down to other targets, including this high right here, underside of the broken trend line at the same level. Lots of things to work to and through if the sellers are to take more control. But we are below the 38.2% retracement in the 100-bar moving average here. So that's giving the sellers some play finally in the sterling versus US dollar. We'll see if they can keep that some play in play today, if that makes sense. So that's my technical look at 3 of the major currency pairs to start your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.